Perfect. Beautiful, guys. So look, we're going to be going over the proper risk management formula. Remember, so we're going to start off with the fact that the amount of money that you want to risk, right, is the first step of this formula. You're going to divide the amount of money that you want to risk over the amount of movements in your stop loss. If you don't know what that means just yet, it's okay. But you will understand what that means, okay? I promise you. I'll break it down for you. The last piece, really, of really filling out this equation is finding out your lot size, okay? So you can know how much you want to risk. All right, guys. So what I've come to find is when everybody starts off in trading, nobody knows what lot size to put. They usually put like a 0.50, a 0.20, a 1.0 because it's just what they see on. It's what they see on Instagram. It's what they see, you know, people on their team do. It's what they see people do on demo accounts, not knowing it's a demo account, and they're doing it with real money. So, guys, I love teaching this formula because it really helps people understand how much they need to be risking, in order to know how much they're going to be making. Okay. It's going to tell you how much you can risk, how much you can make, but it's all about plugging in this information. So it's very, very simple, but it all starts off with these three components that are going to help you identify the lot size that you have to use, okay? So first and foremost, guys, the amount of money that you want to risk. Let's suppose in this example, right, we have a balance, right? You guys can write this down on your paper. We have a balance of, right, let's say we have a $300 balance, okay? And of these $300, right, you want to risk maybe 5% of your account. So you're going to tell yourself, okay, I'm going to risk 15 bucks, right? $15 is what you want to risk, but you want to enter any trade that comes in and only risk $15. How are you going to do that, right? You're only going to risk $15. So what you need to identify first, something that you get to decide is, I only want to risk these $15 right here. So you would essentially plug that into your formula. So I'm going to plug that into my formula. 15. Okay, now I need to figure out how many movements are in my stop loss. So I already have my balance. I got 300 bucks. I know I want to risk $15, but now we got to look at the actual trade opportunity, guys. We're always going to be getting swipe trades, you know, with 20 pip stop losses. We're always going to be getting, take care, guys. We're always going to be getting, you know, trade opportunities like 30, 35 pip stop losses, right? In this specific scenario, let's say we got a USD JPY trade, right? Let's say we got a USD JPY trade. And they told us, right, that our stop loss was minus 25 pips, right? And our take profit was plus 60 pips. Okay, so in other words, we're risking 25 pips with the potential to make back. Yeah, I know I wrote this down kind of weird. We're risking 25 pips with the potential to make back 60 pips, right? So, all right, now what we got to do is we got to find out the amount of movements, guys. We're talking about movements here. When we refer to pips, it's referring to 10 movements, right? So 25 times 10, it's 250 movements. So 25 pips times 10 is 250 movements. Do you guys see where I'm going with this? So the reason I wrote movements in your stop loss is because I'm not telling you to divide it by the pips. I'm telling you to divide it by the whole amount of movements. You have to do the conversion. So if your swipe trades tells you, hey, you're risking 20 pips to make 20 pips, your stop loss risk is 20 pips, but it's 200 movements, okay? In this specific example, we're talking about a 25 pip risk, but 25 times 10, right? 25 times 10 is equal to 250. So what I'm looking at is a 250 movement stop loss. In other words, 25 pips, okay? Just to be very clear with that. So now I know how much money I want to risk. I said I want to risk $15. I know the amount of movements in my stop loss. I have 250 movements in my stop loss. So now what am I going to do? I'm going to plug it into my formula. Okay. So now, guys, what you want to do is you want to have a handy dandy calculator out. And when you want to use your phone and you just simply want to do this, 15 divided by 250. That's 0.06. That's going to give you your lot size. So 15 divided by 250 is equal to 0.06. In other words, your lot size to only risk in this trade opportunity that you receive from swipe trades, from pips and dips, from whatever trade channel you got it from, to only risk 15 bucks with the stop loss that you got, your stop loss has to be a 0.06. You guys see where I'm going with this? So guys, a 0.06, now knowing that you're risking a 0.06 to only lose $15, to only risk 15 bucks, let's talk about the potential of money, the amount of money that you can potentially make, right? So we know how much we can risk. We know how many pips you can lose, but let's start to calculate the take profit, because now we know the lot size that we're leveraging. So guys, we go in here and we multiply 60 pips times 10 to figure out how many movements we have. 60 times 10, if you guys want to participate, what's 60 times 10? It's 600, right? 600 movements times the 0.06 lot size that I placed. In other words, 6 cents times 600, that's going to give me how much money I could potentially make. So I'm going to come in here, 0.06 times 600. I can make $36. So right before I even entered the trade, guys, mind you, this is before you even entered the trade. You're still thinking beforehand. You're like, okay, I want to risk 15 bucks. What's my loss size got to be? 0.06. Great. But what's my take profit? 60 pips. So a 0.06 times 60 pips, or 600 movements that I can catch, that can potentially make me $36. So I'm risking $15 with the potential to make 36. Do I like those odds? I do. I'm going to take the trade. That's the psychology behind this proper risk management formula, because you're going to start with the risk. You're going to start with the amount of money that you want to lose, but it's end all be all is going to give you the amount of money you can potentially make at the end of it. Does that make sense? So guys, how is this going to help you? How is this going to help your team? Guys, look, what I've come to find is every single time someone new comes into trading, they don't know what they're supposed to do with the lot size. They don't know how much money they have to put in there. They don't know how many cents per movement they have to actually, plug into the lot size. So what people have to start doing is teaching this proper risk management formula so that people can know this. That's the first thing. But the second thing they need to do is they need to start realizing that the trade eventually, right, if they're risking $15, when the trade goes negative 15, it'll stop out their trade, right? But once the trade starts getting close to $36, that's when they should start taking profit. You guys see where I'm going with this? Oftentimes, guys, people don't make money in Forex, not because they don't make money, because I know a lot of people that they're always in the blues. They're always in the blues. But their biggest problem is they don't take profit. Crazy. Take profit. The simplest thing, you're not taking the money that you're supposed to be making. So look, if you know that the ultimate amount of money you can make off this one trade is $36, and you're already up 30 bucks, you're like, shit, I mean, I already made 30 bucks. I'm only going to lose out on $6. It may not hit my take profit. It may, but I'm securing $30. Automatically, you can close the trade. You know it's a good thing to do because you're securing $30 profit, even though it didn't hit, right, your take profit. But you secured the money. Maybe you were at work. You didn't have to worry about leaving the trade and having it potentially go back down. So you decided to secure the trade knowing that $36 was the ultimate amount of money you can make off of that potential opportunity. So guys, look, this rationale, this way of thinking is really going to help new traders out, and it's going to help them really learn this information and really understand how they can start plugging in trades, but still know when to take their money. Okay? So guys, I'm going to do another example for you guys. I'm going to do about 2 more examples for you so you guys can really understand how this works. I'm going to do it with some like GBP examples. I'm going to do it with big lot sizes, small lot sizes, with big balances, small balances. But we're really going to go from there. First, let me really go ahead and let me find an eraser real quick. Can you lend me a sheet of paper real quick? We're getting ratchet out here. We don't got nothing to erase with, so we're just gonna use this. Here's what it is. Right? All right. So what we're gonna do now, right, is we're gonna do another example. I'm gonna put the proper risk management formula over here on the side. Remember, the amount of money that you want to risk over the amount of moves in your stop loss. That's going to equal your lot size. Okay? Got to remember that. So now let's say we're talking about a balance. Okay? Let's say our balance got a little bit bigger. Maybe we're playing with $1,200. Okay? And I want to start increasing the risk on my trades. And I say, you know what? Okay, this next trade that I receive, I want to risk 120 bucks, but I only want to risk 120 bucks. I'm only okay with risking 10% of my account, $120. So I'm like, okay, I'm gonna risk 120 bucks, but what's the trade opportunity I get? Bing, 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 right? We get a little swipe trade come in, cool. And that swipe trade tells us, hey, look, it's a GBP USD trade. So the trade idea, it's GBP USD. They tell us that our stop loss is 40 pips and our take profit is 90 pips. Okay? So now what are we going to do? Now we're going to start doing some calculations, right? Let's start plugging in the formula. So I tell myself, how much money do I want to risk? I want to risk $120, right? How many movements are in my stop loss? So I'm going to go to my stop loss and I'm going to say, okay, 40 pips is 400 movements. 400. So now I know that I'm plugging in here the number 400. Now I can use my calculator, or I could have just done some mental math. Instead of doing this, right, I could have just said 120 is what I want to risk. 400 movements is what I'm risking with the trade. So I got to put a 0.3. In other words, a 0.30 lot size to only risk $130. So now I'm like, okay, I'm risking 0.30, but how much money can I make? Now you want to go to the take profit, because now you want to see I'm risking 120, but how much is this going to potentially make me, so I know when to take profit. Now I come over here, okay, I say 90 pips. How many movements is that? 90 times 10, 900. So 900 is my take profit, my ultimate movements and my take profit. And now I can say 30 cents times 900, and I'll do some math. 30 cents times 900, $270. So now I'm telling myself, okay, 270 bucks is what I can make. I'm risking 120, but with the potential to make 270. Do I like those odds? Yeah, I do. So I'm gonna take the trade. So that's the whole rationale. You could get very good at this formula, and just off of copying and pasting, guys, you can make a lot of money because you're properly risk managing. You see, that's how we're supposed to use this service. We're supposed to use this knowing how much money we're risking. That's why in every trade idea it says use proper risk management, but nobody shows you how to do this formula. Unfortunately, iMarkets Live doesn't have a video on it. I wish they did. Shit, I might as well just post this one, right? But we don't have that right now. What we have is you guys. This is the ability where you guys can actually show your team something and you be the individual to show them something that's going to help them every single day. Guys, look, I prioritize building my business very heavily. I dedicate a lot of time to helping new people get started and really take on the opportunity of trading Forex and trading cryptocurrency and really getting involved with this platform. So what I do is I don't often have times to analyze charts. I don't often have time to be on the chart and really looking at this stuff. So what I do is I just use this formula. If I get a swipe trade, if I get a pips and dips chat signal, if Ramel sends me a signal, anything, it doesn't matter. I'm always using this opportunity right here. I'm using this proper risk management formula, so I know exactly what I'm doing, okay? Guys, this has helped me so much in my trading career. I teach it to every single one of my new traders, which is really why we have so much retention, because it's going to allow these people to come into this thing week one and say, yo, I feel comfortable. Guys, remember, competence is confidence. The more that you can have your team know, the more that they can feel comfortable trading, right? The more they know, the more comfortable they feel. So the more confident they'll be trading in the markets. The more confident, the more results they can make. Guys, it's just going to add to testimonials. The more people are growing, the more people are winning, the more people are joining your business. It's a win-win situation. So you need to know this not only for yourself, but know this to teach to your team. Does that make sense? So I'm going to do one more for tonight. I'm always going to be doing calls like this, so definitely leverage calls like this, guys. And I'm going to do one more. And in this example, I'm going to do a Bitcoin trade, okay? Because we also trade Bitcoin, all right? And you're welcome to everybody saying thank you. Of course, guys, I do this for you guys. So let's say we have a balance now, right? Let's say we have a balance of, let's say maybe $3,000, right? We have a bigger balance. Let's say now that we have a bigger balance, we want to risk a little bit more money. So we say, okay, I want to risk 10% of my account, which is $300, right, on this next Bitcoin trade, right? Picasso's been killing it. He's been doing really good. He's dropping awesome analysis. So I'm going to go heavy on this trade. I'm going to trust Picasso. I'm going to risk 10% of my account. So in this next trade opportunity that he gets, I'm going to do it. I'm going to risk it for the biscuit. So I say, okay, I'm going to risk 300. So I plug it into my formula, $300. Now, the Bitcoin trade or the trade idea goes as such, right? BTC, USD, and Picasso, he's known for having a small lot size, but for ultimately having a massive take profit because we're looking for big swings in the market. So let's say our stop loss can be 120 pips, okay? Right, a little bit bigger of a stop loss, but it's 120 pips. However, our take profit is 600 pips. right? 600 pips. So now let's do the math. 120 pips in my stop loss is what? 1,200. 120 times 10, 1,200. So I go ahead and I plug it into my formula. I grab my calculator even. I say, I want to risk 300. There's 1,200 movements that I can risk. My lot size on a Bitcoin trade is going to be 0.25. So I'm going to say, okay, 0.25 is what I'm risking. But how much money can I make? How much money can I potentially make? So I'm going to tell myself, okay, I got 600 pips that I can make off this Bitcoin trade, right? And we know us with Bitcoin, sometimes a lot of us don't even know how Bitcoin really moves, how many movements it really moves in this market. But we're going to say, okay, 600 pips, right? 600 pips is what we can ultimately catch. That's 6,000 movements. So 25 cents times 6,000 movements. Let's think about that, guys. 25 times 6,000, that's $1,500 profit. That's insane value right there. That's insane amounts of money being made. So $1,500, which is why I really only trade crypto. I only trade 3 pairs, Euro, USD, gold, and crypto. I'm telling myself I'm gonna risk 300, but with the potential to make 1,500. Do I like the sound of that? Hell yeah, right? And that's why I trade Bitcoin through Forex, because it's just a smarter way to trade. So guys, look, you can tell that this is gonna make you a lot more comfortable, because not only are you gonna know how much money you're risking, but you know the total amount of money you could potentially make if we expect that take profit to hit. Remember, when we're trading Bitcoin, we're usually holding it for 1, 2, maybe 3 days. So you may not see this happen overnight. You may, it depends. But at the end of the day, it's all about knowing how much you can possibly lose and knowing how much you can possibly win. And as long as you know those two things, you're going to be a lot more confident. You're going to be a lot more comfortable. And as long as you know this, and as long as you know this, and you use this proper risk management formula, your team's going to be confident. You're going to be confident, and you're going to be very, very successful in this market. All right, guys. So guys, with that being said, that's pretty much it. If you guys want to go a little bit more in depth into how I do this, I'm always doing trading calls like this for my team. I hope this helped you out. If you want to get a little bit more in depth, just personally reach out to me via Telegram. A lot of you guys have my contact information through there. But other than that, guys, 20-minute session with Kev. Let's get it, guys. Have a blessed night. Take care. Have a good one.